This video attempts to dramatically enhance your goal-seek experience, using Excel's data table and forecast function. As opposed to the Excel's native goal-seek function, the solution is dynamic, automatic, flexible and transparent. This solution potentially saves hours and hours, if not days of your and the user's time over the long run. Also, it avoids using VBA coding, which, more often than not, introduces greater problems than it solves. Here are the contents of this video. If you wish to skip the introduction parts and jump right into the part applying the solution, then skip to number 3, the solution. But otherwise, I would encourage you to see the whole part, as we will introduce one idea after another throughout the video. 1. Introduction. Goal-seek function solves the problems like what is the annual sales volume that achieves net income of $100,000, when the unit price is $10 per unit. Instead of having to select the goal, target value, and input cell in the model scenario each and every time you run the goal-seek analysis, this video provides dynamic, automatic, flexible and transparent solution without VBA. What I mean by dynamic, automatic and etc. First of all, the solution is dynamic because the target value can be both manually input, or linked from other calculations. You don't have to manually input the target value, but instead, it automatically changes as the target value changes as per the formula. For example, you may not want to just achieve $100,000 net income. You may also want to see $150,000, $200,000, and $250,000 net income and see what sales volumes achieve the target values respectively. The target value may be determined by 3% of the total assets of the company, instead of absolute amount. You will want to lively calculate net income target value by formula, such as total asset dollar amount times 3%, and automatically run the goal-seek analysis whenever there is a change in the model, instead of calculating the amount by each case and manually inputting data into the window. Therefore, dynamic goal-seek function will save your time significantly, and make your life much easier. Secondly, the solution is flexible because you will be able to toggle between the goal cells at a click of a button. You may not just want to target net income. You may want to achieve other goals, such as total amount of earnings after 5 years, return on equity or cash balance at the end of certain period. It will save a significant amount of time if you can just toggle between the goal, and Excel automatically update the goal-seek analysis. Otherwise, again, you would have to run the manual goal-seek function one by one, manually inputting the target value. It is automatic because Excel lively updates the goal-seek results as you update the model. This is another key difference between the native goal-seek function and the solution. You may change some settings of the calculation model, and as you do, goal-seek results are updated without having to run it one by one. Or the solution can even calculate the goal-seek for multiple model scenarios simultaneously. For example, you may want to calculate the sales volume that achieves $100,000 net income under different scenarios, such as when the unit price is $5, $10, $15, $20 per unit, instead of only $10 per unit scenario. The solution calculates such sales volume that achieve $100,000 net income in each and every scenario. The solution is transparent because it calculates the results by Excel's native functions, meaning, if you look at the cells, users know exactly how they are calculated. This is not the case with native goal-seek function. It just spits the answer and hard codes the number into the input cell. Users have no idea how exactly the value was calculated. They wouldn't even know it as the break-even value to achieve certain target. Also, the solution does not use VBA coding. No use of VBA means more visibility of the process to a wide variety of end users, therefore more transparent. Last but not least, all of these benefits, these time saving and energy savings will not just add up, they will multiply one another, because the combination of what the goal is, what is the target value, which input variable to be analyzed, what is the scenario of the model don't just add up. They multiply. So the benefit of mastering this solution is exponential. If you are already excited so far, then this video is definitely for you. Otherwise, if the above does not make much sense to you, bear with me and we will take a step-by-step approach to cover the topic, using very simple bank deposit and interest earning example. If you already know data table and forecast solution, then you might want to skip to number 3, the solution, and see if this is what you know. But I would still encourage you to see the whole video, as it may still bring new insights and ideas that hopefully benefits to your modeling. 2. Goal-seek function and its limitations. We will review the native goal-seek function's strength and limitations. GoalSeek is an excellent native function built in Excel to reverse calculate the value of an input variable that achieves the target value of a particular output instantaneously. Every well-designed spreadsheet model consists of three parts: inputs, calculation model, and outputs. For example, if you deposit $10,000 at the beginning of the year with 5% annual interest, it will grow to $16.3 thousand at the end of year 10. This is an example of calculation model with $10,000 and 5% being its inputs, and $16.3 thousand its output. If you want $20,000 at the end of year 10, how much do you need to deposit? The answer is $12.278, and this is how you solve using Excel. Very handy. It only took literally 7 seconds and 11 keystrokes and clicks to solve. Instead, if you want $20,000 at the end of year 10 with only $10,000 deposit, what has to be the annual interest rate at which your deposit grows over time? Again, Excel easily solves it, and the answer is 7.177%. So far fantastic. Why would you even bother learning new ways to solve the GoalSeek problem? This is because while it is definitely an excellent tool, it has limitations and inconveniences. What if you want to solve the problem that looks like this? Or this? To solve these problems, you have to repeat the same process over and over again. But it should still be doable, probably within a minute. Let's do it just once to see how painful it may or may not be. Okay, not too much pain, but it almost took me 2 minutes to complete it, instead of within a minute. If I want to complete another table, it will take minimum another 1 minute. However, as the model becomes more complicated, the combination of input variables to be analyzed, goal cells, target values increase exponentially. You would definitely want to automate this process, and never worry about dealing them with repetitive manual processes. 3. The solution. Without further ado, this is the solution to the same problem. First, you create a data table with interest rate as the horizontal axis, and initial deposit as the vertical axis. This data table calculates the different output, in this case, the bank balance, based on different combinations of inputs. Then we use forecast function to identify what the initial deposit has to be to achieve the target value of $20,000. If you are not familiar with the data table, then check the video in the description below that explains in depth about the data table. As demonstrated in the video, it solved the problem in less than a minute. But the benefit is not just because it fills the table more quickly. It automatically updates the analysis if you change the model scenarios. Instead of this, you may want to change the set of scenarios to this. The solution will automatically update the analysis as you can see in this video. Otherwise, you would have to do the goal seek 5 times. In addition to that, you can change the target value and the solution automatically updates the results. This is an additional 5 times, 10 times, 15 times, 20 times the solution saved your time doing goal seek manually. The target can be defined by a formula, and the solution will still work. It can be anything such as number of kids time tuition price per kid. As great as this solution may be, there is a catch. Excel forecast function predicts value by linear regression method, meaning, if the values change exponentially, the break-even analysis is not as accurate. In case of exponential change, one way to increase accuracy is to narrow the gap between each of the data table axis value. This is it. I hope there were some insights you may take away to make your models more flexible, efficient, transparent to enhance your modeling and risk analysis experience. Please leave comments and subscribe to the channel for future videos.